back. My name is Chris Sashnelli. I get to build, buy, and sell simple profit businesses every single day. And today we want to talk about the idea for a new podcast that we have that we'd like to introduce to the community and start to produce content for. And hopefully the goal of today's video is actually to give a little bit of a background for potential guests who would be joining this podcast. So it's a little bit meta in terms of the why, in terms of why we're doing it. But in terms of value, what we're going to do is get into A, the scope of this podcast, and then B, we want to communicate a little bit better in terms of who we are, what we're about, and why somebody would want to come on as a guest inside the Bootstrap to Billions podcast. So getting right on into it, the podcast in general, the idea is to be able to invite game changers, folks that have accomplished awesome things in their journey of life. They don't necessarily need to be billionaires or even aspire to be billionaires, but it would be cool if we did get a couple of billionaires on the pod. But we want to really just be able to talk about the story behind building, buying, or investing in world-class, hopefully profit-led businesses. And my goal personally, selfish to be selfless to be selfishist, is on every single episode to try to pull some sort of gem, some sort of insight out that we can then apply into our own business at Bootstrapper Capital as we ourselves are bootstrapping to billions, right? So we do have our own game plan in terms of how we are building or bootstrapping a $1 billion business. And that's what I want to get into in today's video. When I talk about the who we are, it's really more of showing kind of like what we're doing. So, you know, the hypocrisy of the title, the brand isn't there. You know, we quite literally are doing this every single day. We're living this life every single day. And for all of those reasons and probably more, we want to be able to jump into it. But if you happen to be a guest, if you happen to be somebody who would, you know, maybe be a great guest for this podcast, we do put in a lot of intentional time into everything that we do. And we have a very well thought out 17-page document that we would share with you, right, in advance. And it will take you through kind of the structure of what we're hoping to accomplish. So for every episode, we really want to turn it into a conversation. We want this to be a conversational approach, but we want to be prepared and we want to make sure that you feel prepared as well. And that we're going to be talking about the right things at the right time to the right audience to create the right level of value, right? So we'll provide this document, which will frame everything out, get everybody prepared appropriately, and then we'll take a conversational approach to the interview. And once we get a good foundation of who you are, what you're about, what you accomplished, your journey, your story, we'd like to shift it into more of a teach, train, equip type of segment. So hopefully on every single one of these episodes, selfishly, you know, myself, I'm learning something, but also selflessly, we're in a position to be able to teach, train, equip our audience, which is mostly profit-led business owners, right? We operate a newsletter every week that goes out to 50-something thousand, and we're now trending towards 100,000 subscribers, business owners. We're building up this YouTube channel. We just passed the milestone with that, right? We want to teach, train, equip our audience with the right level of information, right? So that we're actually creating value. We don't want to just have another, you know, thing that's out there for the sake of doing something. We really want to build this with purpose. And then to translate that content into purpose and again, value activation through experiences inside the community that we host. We want to run optionally, if you want to do it and you're willing to invest more time to create more value for our community, our ecosystem of really awesome, authentic business owners. Then we want to host AMA sessions, Ask Me Anything sessions. So you would come on as a guest after the podcast goes live, after people know your story, after they've been able to learn something from you. They'll be able to consume that content. And then after the fact, we'll host an AMA, an Ask Me Anything session in the community, which will lead, and it will go deeper into fielding questions that came from the pod. So we'll ask the community about, you know, things that they're hoping to get clarification with, things that we could go into in-depth insights with, you know, in a more comfortable, formal, in a more comfortable setting than what could sometimes be like a formal podcast where it goes out on YouTube and anybody could hear it or say it. So maybe we don't sometimes say exactly what we would want to say if we were just in a room with a couple of buds helping them out, right? Like, what's the information? I do my brother test, right? I got a older brother. I love him to death. It's like, what information, like what feedback or advice would I provide him? It's like, that's what we want to do within our ecosystem, our community, authentic, good information. So this AMA session will hopefully allow us to do so. And if we are afforded additional time, then we'll go into, some potentially more deeper dives, teach, train, equipped, right? And we'll make sure that there's preparation in advance for everybody. So I just want to let you know that if you are interested in doing this, there's a lot of thought that's going to go into it. There's a lot of production and investment and a lot of value that will ultimately come from it. So we also are trying to create an incentive system as well. I'm just breezing through this quickly, but there is a legal disclaimer and all these things. I'll share it with you if you're interested in becoming a guest on the pod. But we actively invest into companies, and we are trying to build a community capital fund. So we're building a proof of concept fund for the community. And we're trying to leverage a lot of what we do within this community concept fund, waive management fees and pass a lot of the savings, and truly create and deliver the most affordable and flexible performance-based capital to business owners, right? So there's also some incentives that we tried to put together to make it, give to get. We want to make it super, hopefully appealing and attractive, and as a byproduct, super valuable for the ecosystem that we're trying to support. So again, you would get this document well thought out. It gives, all the stuff that you kind of need to be able to think about. Now, that being said, if you're thinking about this and you're going to do it, like, who are you doing it? Who is Bootstrapper Capital? Who is Chris Dashinelli? What are we about? So I'm just going to go through a quick high-level overview for anybody who's not already familiar. And this is my one pager on Canva. I quite literally did this live, like within probably 3 or 4 minutes before I record this video. Again, I record all these videos, one shot record, no edits. In fact, my kiddos are about to come into the house, so you may hear them in a second or two with background noise. That's like as authentic as you can probably get. So Bootstrapper Capital, we're all about helping profit-led business owners. Bootstrapping is in our name. That's who we focus on. We focus on folks who are non-venture backed, right? So if you're a non-venture backed business, if you care about putting profit in your pocket, right? If you care about making payroll, if you're stressed about that, you feel the anxiety and the pressure that comes along with building or bootstrapping a business, right? Which is serious and realistically life changing, in both positive and negative sense, then that's our people. That's who we're building this for. And we're trying to really provide the structure, strategies, and accountabilities through community connections and capital to be successful. And specifically, we're focusing on helping profit-led businesses unlock value. So we're all about value creation and unlocking value. I'll get into a second about what exactly this paragraph means, because it's not just buzzwords. It actually means stuff to us. It matters, right? By building Wedge equity, I'll tell you what Wedge equity is, while mastering the 5 exits of ownership. I'll go through what that is. So when we talk about unlock value, we genuinely mean that. We believe that you could get into pretty much any business, anywhere, anytime. And just like you could find any house, right? Just go like knock on a neighbor's house being a business. We believe that there's a gold bar buried in every single yard, right? Like inside of every business at pretty much all times, as long as the business is within a certain level of scope of establishment. So asterisk there, if you just wrote something down on paper and you just incorporated this, isn't viable. You have to have viability. You have to have some traction, right? But inside of every business, there's value that just lives. You don't have to create it. You just need to find it and unlock it. It already exists. Just like, again, if you were to knock on that door of a homeowner, and you happen to know insider information, there is a gold bar there. There's nothing to do other than find it, unlock it, undig it, right? Dig it up, and it's there, right? Instant value. In businesses, we believe the same, and we've simplified the concept of how we unlock value, and it comes down to building wedge equity. So when we talk about wedge equity, what we're talking about is the difference of value between time. So as we go on with our business, time continues to move forward. So current value, time moves forward. That's this red line here in this black box. Value of our business is like hopefully what increases over time. But if it's not increasing over time and time keeps going, right, we know that there are certain things that we could do to unlock value and build Wedge in a business, unlock value in a business. If you do said things, then the thing in the middle, this yellow, that is quite literally the wedge. And that becomes the wedge equity or profit in your pocket. That's the value that you're unlocking, which builds a more profitable business, hopefully gets you to higher valuations, better terms on investment if you're going to look to raise capital, larger exit multiples when it's time to sell, right? So what we're focused on is building wedge equity with business owners that we partner with, that are clients inside of our ecosystem or portfolio of companies. And we also look to actively finance those. I'll tell you about that in a little bit in terms of why and how. When we talk about the 5 exits of ownership, right, we're not just talking about the final exit. So we're not just talking about getting, businesses exit ready for the final exit, which that final exit most folks think about is, let me stop owning my business, right? We want to prepare folks for that. So we want to make sure that when you get to that 5th and final exit, you're truly getting to freedom and you're getting the most possible value that you can in terms of profit in your pocket for your business when it's time to sell. Now, fast forward, we happen to own a business brokerage, disclaimer. So we do actively represent business owners when they're looking to sell their business, as well as buyers when they're looking to buy the business. And it also gives us kind of insider information in terms of how to value a business and what buyers are looking for in this buy-sell process. So we actually know what we're talking about from firsthand, experience of a portfolio company that we own called simplebroker.ai. We believe, though, that there's 5 exits of ownership. We believe that a business owner is always exiting. Whether we acknowledge it or not, we're all always exiting. Sometimes it's an exit that we don't want. We go out of business, right? We happen to run out of money or something goes wrong. We can't, right? That's a bad exit. Also, the fact is, if we're working towards that 5th and final exit of a sale, there's other smaller exits that we all navigate in that journey. For example, right? First exit for many folks, everything starts somewhere, and a lot of folks in our community are just getting started. And that's perfectly okay, right? Everything starts somewhere. The first exit is, investpreneurship, a less risky approach to capitalism, something that we promote inside of our community. Go get a job, get somebody else to pay you to get experience. Take all of that experience, some of that pay, build something on the side. The first exit you're going to experience as a business owner is exiting your day job and then making your business your full-time job, right? So the very first exit is like, now this is our job. The second exit is, we don't want to have a job. We're not in business to build a job or a liability. We want to build assets that we could one day sell, right? Or businesses that work for us, systems that work for us. So the second exit is, let me exit out of doing the work, right? And start managing or hiring people. That being said, when you start hiring the people, you need to now start managing the people. So the third exit is typically stop managing people, right? Nobody wants to be a manager or a micromanager in their business. In order to stop managing people, you need to start building a business system. Business systems are things that start to work for you, right? They're structures and strategies, and through, time maintenances and calendar of cadences, accountabilities, measure what matters, accountabilities, etc., that hopefully helps take you out of the day-to-day management of the business and lets the business start working for you a little bit. Then you got exit number 4, which is stop operating the business every day, right? If you got a business system, you're still running the business. Exit number 4 is stop running the business and hire an operator. That's really the kind of like the first real exit for a business owner, is the first time that you can actually potentially get into a passive income type of situation where you built up an asset and now that asset's going to pay you without you having to work for it, right? So you're going to stop running the business. You're going to start hiring an operator. They're going to use your business system to manage and run the business and put profit in your pocket. That then gets you to the 5th exit. And the fifth exit is what we talked about when we started, and that's stop owning the business. Maybe you hear my kids in the background at this point. Again, authentic. It is what it is. Stop owning the business is, you literally, quite literally, no longer own the business. You want to sell the business. You want to stop owning the business, and you want to hopefully start, living a life of freedom. You want to get to the freedom number, which is why we do a lot of this stuff in the first place. Now, for us to support this journey, what we're looking to do is unlock value and build wedge equity. Again, wedge equity is a more valuable business at each one of these exits. So that's what we've built our portfolio of solutions around at Bootstrapper Capital, and really my holding company, Simple Holdings. Keep it simple, right? So simple. We truly believe in everything that we do. Put it in the name, right? Keep it simple. Simple works. Simple's not easy. Name of my actual holding company, Simple Holdings. A lot of our brands are tied to Simples. Our advisory firm is Simple Profits. Profit is a big part of what we do. So we have our brand equity firm, which is profit led. We believe in process, so we have process led, right? For example, Bootstrapper Capital. So what we're looking to do here is work with business owners at each of the 5 exits to unlock value by building wedge equity. Now, how do you build wedge equity? How do you unlock value? So first and foremost, we took an approach which is just super pragmatic. It's a pragmatic based approach. It is what it is. Same with how we approach a lot of our processes that we put in place. Black and white, it is what it is. So the first thing that we look to do is to unlock value by identifying where the value lives, right? Again, if you have a house and there happens to be a gold bar, the first thing you're going to want to do is, if you think that there's a gold bar, is probably go get a metal detector and go, walk around the yard until it beeps and then go dig it up. You want to find the value. For us to find the value, the way we approach it is we leverage the due diligence process that actually we created for ourselves, because we started in this game building. I bootstrapped businesses myself, many businesses. We've sold businesses that we built ourselves. We've also bought businesses. We've also invested in businesses. So we took our own practical experience, do it for yourself before you do for others. And we created a very comprehensive due diligence process, right? Because in due diligence is how you're looking at a company prior to investing or buying it. In the due diligence process, the name of the game is to take risk off the table. If you can decrease risk, then you can maximize your upside reward. Again, why with entrepreneurship, we promote a less risky approach to capitalism. Take risk off the table, you're going to increase your likelihood of reward. So we took our due diligence process and we productized it. We turned it into something that we could do consistently and effectively for others, right? Part of that process is the ability to go through our business brokerage firm, Simple Broker, and value businesses and provide a business valuation, right? Because oftentimes what we'll find in our process is a lot of the things that go into the diligence also goes into a more formal valuation. By combining the two, we created a better version of everything, a more in-depth, very extremely comprehensive perspective of what a buyer's thinking and what the market's thinking as a whole. And we're able to actually identify, what is your business worth today? By knowing what your business is worth today, we can then answer the question, why is it worth that? By answering the question, why your business is worth that, we can then identify, how can we make it worth more? Right? So again, very pragmatic, systematic in terms of approach. What is your business worth? Do you have a house with a gold bar? Yes. Right? Why is it worth that? Right? We're trying to find it, take out that metal detector, identify, the pings. How can we make it worth more? Dig up the gold, right? So we take a valuation-based approach to identify the key drivers that go into then building wedge equity. And when we look at wedge equity, we took a very complicated concept and we've simplified it. We simplified it to brand equity, which is the money's multiple. Money's multiple is broken down into a number of things: your customer acquisition pillars, your 9 C's of customer retention, lifetime value, the diversification of your customer portfolio, right? So key drivers impacts your revenue, impacts your sales discretionary earnings, impacts your money's multiple. So money's multiple is how much the market or a buyer is willing to pay multiplied times the earnings that they put in their pocket, seller's discretionary earnings, which we stabilize. So the money's multiple is a function of valuation. The other thing that people don't tend to talk about is the thing that, because most people think it's just the money's multiple, how you value a business. It's not true. A buy side, you're diligencing a deal and you're trying to find a risk and you're trying to beat somebody up on price or more typically terms based off of risk assessment. We've simplified risk into operational equity, the risk ratio. So we look at brand equity, money's multiple, operational equity, risk ratio. Those two things equals wedge that we could build. We then took something that's very simple, a formula, brand times operational equals wedge, and we've then extrapolated into a process and a structure and an approach that's extremely comprehensive to be able to manufacture wedge. And the goal through our business system is to be able to help our clients or help business owners master these 5 exits, and at each of the 5 exits, build wedge equity, right? So it's a what to do. Here's a plan, right? What your business is worth today, evaluation, and ultimately what becomes a how to build wedge, which becomes a transformation plan. So we do evaluation of the business. We create a transformation plan. We then focus on when to do it, right? Because if I know what to do, cool, move it forward. If I know what to do, but I don't necessarily know how to do it, I'm not going to do anything, right? So we want to make sure that it's very clear in terms of how to do it. If I know what to do and I know how to do it, I don't necessarily know when to do it, or I may not get it done if it's not a priority or I don't have time. So we want to make sure we know what to do. We want to make sure we know how to do it. We want to make sure that it's getting done. And then we want to reinforce the why. And because a lot of this is like deferred or delayed gratification, it's not all immediate right away. You're doing a lot of work proactively to build a better business so that over time you put more profit in your pocket. We just want to reinforce that why you're doing this to put more profit in your pocket. You're doing this to unlock value. So by doing this, each one of these exits systematically should come faster. They should come sooner, and they should be more profitable when they come, right? So we should be putting more profit in our pocket as we're exiting. And then when we get to that 5th and final exit, you will have a much better exit ready business to sell, and it will sell for more because it will be worth more from the money's multiple, and you won't get beat up on price and terms from the operational equity, the risk ratio. Excuse me. So that's the what to do, the how to do it, when to do it, the why to do it. In terms of our approach, so this is ultimately the big scope, but how, what's our approach in taking this? Building wedge equity is a simple concept, but it's hard and complicated to execute. It's even more complicated when you're doing it at scale with a lot of business owners. And at the end of the day, every business owner that's profit-led should be doing this stuff. So it's a large addressable market. There's also a known silver tsunami of exiting business owners, aged out business owners, large number of business owners currently owned by demographic of owner that will be retiring sometime soon. So there's a large upward macro trend in terms of demand. So when we're approaching this, we're trying to approach it from a system of scale, and we want to be able to service and support and help by providing solutions to as many business owners as possible. So the first thing that we've acknowledged and learned in working with clients is just because somebody has a plan and they know how to do, like what they need to do and when they need to do it, doesn't mean that they necessarily get it done. So the first thing is, like, even though you have a plan, doesn't mean you do it. And even if you have a plan to build a better business, doesn't mean you do it. Even if it's a great, extremely detailed, thorough plan, which ours are. Ours are extremely detailed with like hundreds of different checklist points in terms of exact focuses of importance. What we decided to do was, in order to unblock capacity as the constraint, or the people as the constraint, the owners, it's really a capacity issue. If you have the plan, but you don't necessarily have the time to do it, or you don't know how to do it, capacity is the issue. It doesn't get done. In order to unblock capacity, that's why we are building our own portfolio of solutions, and why we're also building the ecosystem that we're building. So if we can't do something ourselves through one of our own companies, which we have a number of different companies that specialize in different aspects of building wedge equity, If we can't do it, then we try to go to the ecosystem and find somebody that can, or somebody that could do it better than us, and we partner with them so that we can unblock the constraint of it getting done, right? Get a plan and then get it done. Follow the plan. So we have a solutions ecosystem, a portfolio of companies that provides the solutions that actually builds Wedge equity. The next thing that we oftentimes hear as a concern or an excuse, you could probably use the word excuse too, in terms of not following a plan or executing to outcomes, would be, capital, money, right? Money is oftentimes an issue and a concern. So I know I need to do this. You've provided me with the partner that can get it done. I don't have the money to invest into this right now. In order to unblock that, we have our capital. So we want to become the capital partner of choice for any and every small business, any and every profit-led business, until you eventually exit, right? We want to be your capital partner of choice until you no longer need one, realistically. So in order to do that, in order to achieve that goal, be your capital partner of choice, what we focus on and what my personal North Star is providing the most affordable and flexible performance-based capital. And affordable and flexible performance-based capital ebbs and flows, right? It's flexible because unlike equity or unlike fixed term of a debt note, where you have to repay it in certain cadences and it constricts and constrains cash flow, ours ebbs and flows with the performance, the revenue and profitability of a business. If there's revenue and profitability, you pay it back. If there's not, we halt the payment. You don't make a payment, right? So it's flexible. It's super friendly. In terms of affordability, when you're going to finance your company as a business owner, you have equity and you have debt, right? You could sell equity in your business, which is like what's common for startups, go raise venture capital or take on a friends and family, do your seed series rounds, right? And grow outside capital. Or you take on debt, which debt would be like bank notes, fixed term loans, etc. Debt is not very flexible and it kills cash flow, right? That's why flexibility isn't so important to overcome the obstacle of being better than debt. In terms of affordability, debt comes with interest rates. So we want to be able to provide a more affordable interest cost of capital. Equity, which is the other alternative to fund your business, hyper expensive for a small business owner, right? It makes sense when you're building the next Uber for X and you're going to get to venture velocity because the pie gets bigger and bigger and bigger and bigger. And even though your share gets smaller, the pie is getting bigger aggregately and you end up with hopefully more, right? It's also appealing for outside investors because there's a clear track for liquidity and when they can return see their returns on capital. With a small business, that's not necessarily the case, right? You don't want to spend 20 years building something up that's limited in terms of its size and give up a percentage of that, right? The pie is not necessarily ever going to get super bigger than what it otherwise would be constrained to be because you're likely constrained for certain reasons, geographic constraints, technical constraints, service-based constraints, etc. Also, for the investor on the other side, there's not a lot of benefit to owning equity of a small business. There's like, where's the liquidity event? I don't want to own something for 20 years to just get like a very small return on. So for those reasons, because the options are equity and debt in the market, reality is most of the market is serviced by debt. Markets are made, so there's certain cost of capital. My challenge became, how do I create the most affordable? So how do I create capital that could be, almost, is it even possible to create a free cost of capital? Can we build a better business ourselves where we could provide, no interest capital? How do we create flexibility? So how do we create a better repayment? So these are the things that we're thinking about. And these are the challenges that we rose to when building a better business for ourselves so that we can then tackle that final, unblocker, which is capital constraints. That being said, what we've ended up landing on is a business system to do this, to accomplish these things, right? To accomplish this one pager and everything that you see on this page. And it's a fairly complicated business that we built up over time. We're very proud of it. And we do believe that there's a business plan here where we can bootstrap, because I'm bootstrapping this business, right? I'm building and bootstrapping this business. I do believe that there's a business plan here where we can truly bootstrap to billions. So tie it back to the podcast that we want to roll out, bootstrapping to billions. This isn't just going to be a brand. This is going to be a commitment and a journey. It's a mile marker. It's a North Star for us to be able to challenge through. So when I'm doing this podcast, I'm quite literally trying to take in conversations, relationships, insights, and then apply it to our own business system that we are quite literally bootstrapping to billions with. How do we bootstrap to billions? So how does our business system work? Well, for us, it's a fairly simple profit engine, right? So one of the things that we do with businesses when we work with them is to map out the profit engine, right? That's part of the process. You want to know how your customer journey is. You want to know how revenue flows through your business. You want to know how you're supporting that. You need to know from a high level picture your profit engine. This is a visual perspective of the profit engine. This is not the technical schematic that we actually use. This is just for the purposes of communication, right? Making it a little bit more visual so that you can kind of see how the business system works from a high level. Up top, we got our acquisition channels, right? So from acquisition channels of paid, right? So you have warm, you have referred, right? You have warm, you have cold, you have referred, you have paid. In our acquisitions here, we're working paid ads, we're working paid sponsorships, paid referrals. We got organic socials and organic, SEO earned through the algorithms. These acquisition channels are driving us new subscribers to our newsletter, which is our primary driver. That's our primary focus. We want to build up the newsletter. We're currently around 50,000. Our next target is 100,000 subscribers. We'll likely get there by the end of the year. And then I want to get to 1 million. We tend to just add another zero when we're setting goals. I started with 10,000. Then we went to, now we're at 100,000. We're midway to 50. So, that tends to work for us. Same with like launching our community and stuff like that. So the newsletter is our primary container. Why? Because you own the inbox, right? So like that's your list. You own it. It's not owned. Can't be necessarily taken away from you. And it's also a great way to nurture and build relationships, and it compounds value over time. In order to build the newsletter, we have our YouTube channel. We have our podcast, right? So the podcast is going to be new, Bootstrap to Billions. And then we have our YouTube channel. The YouTube channel is what is our primary driver of content. The content created on YouTube then gets oftentimes through a teach, train, equipped. So like our current structure and strategy is on Tuesdays, we drop a teach, train, equipped video, long form content that then gets spliced up into, I think like 21 shorts, as well as about a week's worth of social posts and a long form blog for SEO, as well as a template, a digital product. So we use our content strategy to actually feed our offers, our engagement offers. So on our Shopify, which is our shop.Bootstrapper Capital, it's where we deliver tripwires. It's where we deliver lead magnets. It's where we deliver digital products. And we support a transactional based approach to building different types of offers that folks can engage with and convert through. The content that we create is oftentimes the things that we add to the shop so that people can engage and then convert into the business system. From these leads, so this creates awareness, drives awareness into engagement. This creates leads for us. From the leads, we have our business brokerage, right? So I was talking about that earlier. We're building the simplest place to find and finance your next business, simplebroker.ai, which gives us an army of business brokers, which are 1099, ultimately sales consultants, right? These are folks that are building their own book of business, just like a real estate brokerage with real estate agents finding and selling houses. These folks are out in the market and they're working with business owners who are looking for representation to buy and sell businesses. And then we're the intermediary that helps facilitate that. It's a perfect positioning in terms of a talk track and target market for us to generate sales-based relationships. Take a lot of what we do at scale and be able to support and enable a team of folks who are then taking and building relationships, the things that we can't scale through technology. So we have our business brokers out there talking to folks that want to buy, sell, right, transform. They then convert typically from messaging to a meeting that ties in our offers. So typically it would be like, hey, get something from the shop. Let me give you an operating system, or pick one of the digital products that we have, or let me send you a book bundle, right? Oftentimes it's messaging to a meeting tied to value delivery. And then from the value delivery, we convert through the e-commerce to be able to receive the digital products. We onboard them into our community, and we start to deliver a personal exit plan, which is how we assess and collect information from potential prospects. So what we tried to do was consolidate what would otherwise be probably 4 or 5, maybe 6 or more meetings with a potential prospect. And we've tried to consolidate it into a value deliverable, which is a personal exit plan. We believe everybody exits, so you might as well get proactive, you might as well get prepared. And our personal exit plan helps business owners get prepared proactively. And it's a free thing that we do. We do it for free goodwill. The byproduct of the plan is us assessing what exit a business owner is, right? And if they're earlier into the process, that's perfectly okay. We've designed a community container experience that delivers meaningful value for folks that are maybe exit 1 or exit 2 by helping them navigate in a more hands-off way through group advisory. So we pair business owners together for accountability, because we believe in structure, strategies, and accountability. And through boot camps that we've created, which is really just us productizing our advisory experiences and all the workbooks and worksheets and processes and everything that we've invested in heavily, we've converted into these boot camps that folks can work through and then have experiences that are supported through the community to connect to solutions to then be able to build the wedge. So, and navigate through exits 1 and 2. We believe that folks should be committed to the process, trust the process, commit to the journey. And you should be able to do that. If you have a business, you should focus, bundle down, understand what to do, why you're doing it. So start with the why you're doing it, what it is, how to do it, when to do it, get your structure, strategy, and accountability, and then get it done. And don't think about anything else until you get to at least like $30K a month, right? It used to be $10K a month for some reason. Now it's inflation, $30K, because that's just what usually the simple economics of early stage businesses look like when it comes time to actually start building a team, still have profitability within it, still have a budget to be able to reinvest inside the business and kind of build yourself out of the job, right? So that first kind of target threshold that we set is like, get to 30K, just focus on this till you're at 30K, and then maybe start investing in a little bit more. If somebody's greater than, or they've surpassed that, even if they're earlier exits, right? Some businesses, we just worked with a client who they're a couple of months into it. They were a professional. They're a couple, married couple. They're professionals, extremely successful in their own right. And they identified a business and a business model that just like hits. It's like perfect ICP, perfect target market, perfect problem solution, good margins, great product. And it's flying. It's a 7-figure plus business, like really early in. So, it doesn't matter what exit you are. Realistically, you want to set some goals. And we tend to lean into profit-led financials. Know your numbers, set your targets, build into profit-led financials. And then, within the parameter of reality, because financials are what they are, black and white, get yourself out, right? Build towards your North Star, your vision, purpose, mission, and by achieving your objective, strategy, actions. So we have a community container model, which folks can flow into. It's a community-based advisory experience. And then we also have a more formal advisory management firm, which is Simple Profits. And that works with clients one-on-one to actually deliver, to create and deliver value. And everything starts with a plan, right? Just like I was talking about earlier. And it's all about building wedge equity. So everything inside of the community is around unlocking value, building wedge. Everything around advisory is unlocking value, building wedge. Master the 5 exits of ownership. This is how we deliver that core experience of unlocking value, build wedge equity, master the 5 exits of ownership. And we do it at scale across the entire life cycle journey, exit 1 through exit 5, and everything in between. Through the advisory, we get more hands-on. So we're actually getting into the business and we're executing, we're implementing the structure, strategy, and accountabilities that truly go into building brand equity and operational equity. And we do it in a hyper systematic, oftentimes visual, very simplified manner that can get executed. And the byproduct of it becomes more of a performance management structure where we can leave folks with a very clear strategy that they can adopt and lead, where they have clean profit-led financials, which profit-led financials is a very real thing. And we help folks adopt that so that they can then measure what matters based off of, understanding what their business system looks like. How does their profit engine look like? How does it work? What does their process engine look like? How does it function? Is everything hyper efficient? Do we have the right people following the right processes tied to the right targets, right? Are we scorecard mapping that? So we get into a measure what matters accountability by mapping process of the business, how we better support customers for operational excellence, for customer experience, and how do we do it with the right people, with the right targets, right time, right tools, right? And then how are we measuring what matters on a consistent basis for communication loops? And then how are we running these communication loops for retrospectives? How are we reflecting back and saying, is what we're doing good or not? This is how you start to build a self-sustaining business system. This is how this is what you're consumed with at exit 3. And if you want to get to exit 4, where you hire somebody else to run your businesses, like we have a portfolio of companies for us, this is what we do, this is how we place operators, and I don't have to be involved. This is what you want. And then you want to make sure that you're getting that affirmation that it's working by consistently on a quarterly basis, going back to the balance sheet, going back to the valuation of the business, and making sure the wedge equity is being built. So revalue the business, know what the wedge equity is. For us with our advisory management, it's a very structured approach that works on a very bespoke basis. So again, as long as we're within the scope of the right type of business, non-venture backed, and as long as we're focusing on the right things, profitability, profit-led, we could pretty much do this inside of any company. And in doing so, what we're doing is systematically building wedge, which unlocks value. And oftentimes we're identifying different types of constraints, which oftentimes could be solutions. What we've done is through our portfolio, we've built out different solutions that helps build each of the components of wedge. So we have SMB Bookkeeper, which does profit-led financials, bookkeeping. A lot of business owners don't keep accurate books. How do you measure what matters? How do you make good, timely decisions? How do you know your numbers, profit-led financials? How do you set targets and make sure you're running targets in your retrospectives, right? Like, how are you doing that stuff if you don't have accurate books, right? How are you building towards your freedom number? How are you making sure you're on the right road? How do you know your unit economics? Like, how do you grow your team? How do you budget appropriately how do you do any of these things if you don't have profit-led financials? So we make sure we support that. We have profit-led, which is builds profit engines or revenue engines, the things that drive the money's multiple or brand equity in the business. It's a process-driven agency approach, realistically, to be able to help you do that. Same with process-led. The act of implementing the things that go into the money's multiple and the profit engine, the act of even just going through the concept of process mapping, which is just such a important yet boring and tedious thing. It's just like people don't like doing it. And that's the why. Always find the why, right? Follow the money, find the why. It's why a lot of businesses, when it comes time to sell and we're looking at them, because we look at thousands of deals through simplebroker.ai, like we are building out a lot of AI powered data-driven tools to be able to assess and aggregate deal types all across the market, pull in information, benchmark it across previous deals trading and transacting based off different ratios of stuff. So we got a lot of insights, and you'll see a lot of businesses, they just never they never systematically put in the time. It's like, I guess, diet and exercise. It's like you don't get immediate gratification or results overnight, but by doing it systematically, diligently over time, you eventually get there. You build a better body, you're healthier, all these things. It's same with a business. If you're just eating junk food and not exercising, by the time it comes to sell your business, you're going to get not a great price. You're going to get a junk price, right? So do these things proactively and do them consistently over time. Process mapping, something people don't want to do. So we've made it simple. Profit led. That's a little bit more of a technical experience driven thing. So that's typically more of like a know how to do it. We know how to do it, so we'll get it done for you. Process led, more of like a time thing. I don't have the time to do it, so we'll do it for you. People led is, great companies are really built by great people. And if you eventually want to get yourself out of a company, you need to hire great people. So people led is all about human capital management, how we support from that function. End of the day, our job is to be able to get folks to build wedge equity, identify, what needs to be done, how it's done, when it's done. We're always reinforcing the why. And if you ever need help, we get connection with that. And if one of the things that you need to be able to get access to be able to execute is the capital, that's how we fund businesses. So we diligence every business through our advisory. Everything starts with a plan. Again, earlier I mentioned the fact that we started with our own diligence process, right? We bought and invest in businesses. So we created a diligence process that we then productized. Productized version is what we do with advisory. So when we're working with clients, we're actually still diligencing clients. And everything starts with a plan for us. If you want to sell or transact in our brokerage, you need to do a plan because we need to know what's going on in the business. If you want to buy a business, you want the business you're buying to go through a plan so that we could diligence that business and know what's going on and put a plan in place for how you're going to integrate it, transform it when you take it over. If you're looking for capital from us, everything starts with a plan. We need to diligence your business. We need to know what's going on in your business, why, what it's valued with, where the equity lives, how we can improve the business over time, right? Everything starts with a plan. If you happen to go through that experience, you'll have access to our performance-based capital. So if you're working with our advisory team, you'll get access to performance-based capital. And if you want to use the performance-based capital, which is an equity line of credit, you'll tap into the Wedge equity balance sheet, create an equity line of credit. You can then finance solutions from our portfolio. If you do, we have situations where it'd be zero cost of capital for you. So quite literally the most affordable, and hopefully through our model, which again ebbs and flows with performance, flexible. That's how we're achieving the most affordable and flexible. We believe that if I can achieve the most affordable and a flexible capital for a business owner, business owners will always gravitate towards where the most affordable, where the best capital is. So if we are the best source of capital, then hopefully over time, everybody will flow through our business system. By flowing them through the business system the way that we built, in a very consultative value add way from the very start, right? So we're creating value with the content. We're turning value into products that are transactional for people to just put to work quick so that we can then build relationships and run a consultative based sales process by delivering value of a free personal exit plan, getting folks into a community that is a container of value to deliver the ability to unlock value, build wedge equity, to work with our advisory to actually truly diligence and get a plan in place so that we can then support that plan successfully, to then financing it through hopefully the use of our own portfolio solutions, which are built to suit, to execute on the job at hand, the job to be done, build wedge equity. Hopefully through this system, it becomes a very, very successful, healthy value add flow and hopefully a loop, right? Because hopefully when we're doing this, eventually everybody masters the 5 exits. Hopefully they come back, they exit with us, right? They transact with us. And when they're transacting with us, it's a better business because we're supporting folks building better businesses. The repayment rates on our capital is higher, right? Because it is more affordable, more flexible. Folks are more comfortable putting the capital to work, which helps them build and execute a plan to build a better business. Hopefully it's a very virtuous life cycle ecosystem that we're building here. And the way that we built Bootstrap to billions ourselves is if you look at the holding company that we're creating, then ultimately at the end of the day, you're looking at our own multiples, right? Our type of business receives, we could easily put a 10x multiple on this. So simple math becomes, how do we flow $100 million through this ecosystem? How do we place $100 million a year into profit-led business owners? How do we support $100 million worth of or $1 billion worth of equity being created by supporting business owners, unlocking value, building wedge equity, repaying back that performance-based capital over time, and then hopefully doing so through our ecosystem, our portfolio of businesses, hopefully transacting more businesses, creating more value for the ecosystem. Hopefully there's a system of reciprocity. When people exit, maybe they reinvest back into the ecosystem. Now that they have the ability to do so, they pay it forward. It's like, what do you do with that capital after you exit? Maybe this becomes a solution. So that's the business that we're looking to build. And that's how we plan on bootstrapping to billions ourselves. It just becomes a function of more, right? More audience. So how do we get to a million newsletter subscribers, right? How do we get to 100,000 YouTube subscribers, right? How do we get a function of more audience by doing better content, right? Better content, creating better digital products, better things that people can transact with faster, which creates more leads that are more intentional leads. So they're better leads that feed hopefully more business brokers. How do we get to 1,000 brokers? Right? I want to be able to take on 1,000 business brokers. Right now, that's the target inside of our ecosystem, which would make us the largest business brokerage by headcount in the States, in America, I believe. Asterisk, I'm not certain, positive, but based off the information I have, that's what would be the case. So how do we get more better business brokers that can do more, build more relationships so that we can get more folks into the community? How do we get 10,000 folks in the community? Right now we have about 500. Our next target is 1,000. So we'll get to 1,000 soon, and then we'll get to 10,000, right? So how do we get to 10,000? More, better, right? And how do we create more value for more clients? How do we get to 1,000 clients that we're funding, 6 figures or more worth of performance-based capital with, so that we could put $100 million to work and, flow through and be at $1 billion valuation. So that's how we're building Bootstrapping to Billions. Again, this was, initially kind of a precursor to the podcast, but it turned into kind of a little bit more about who we are, so that if you get onto the podcast, you know what we're about and why we're doing what we do and how we're doing it, a little bit more technical information. I just believe that if you can support a better journey, provide more information, it's all about helping people make good, timely decisions at the end of the day. So that's the why behind this. Hopefully you enjoy this. If you're not already subscribed, please like and subscribe to the channel. Obviously, as you know, watching us this far, we're trying to build it up. It's one of our big initiatives. We just met a major milestone this past week, and we did it with an exact time frame, and we did it in public. We did it through the newsletter. We did it with our community. So we're really proud of these accomplishments. And it's like anything in life. It's how do you eat a cake? One bite at a time, right? How do you bootstrap to billions? One target at a time, one milestone at a time. Be consistent, trust the process, commit to the journey, just show up every single day. Until then, I'll catch you next time.